What if I told you the world's greatest investor was happy the stock market was crashing? This is Kenya News Update today. Coming up, you'll discover Warren Buffett's shocking advice during a global panic and why a Kenyan investor should care. Meet Warren Buffett, the Oracle of Omaha. On February 24, 2020, as coronavirus fears sent futures plunging 3%, he went live on CNBC. But here's the twist. He wasn't worried. He was smiling. He told viewers, "Don't panic," and he revealed the one question every investor must ask. For decades, Buffett has built Berkshire Hathaway into a titan. But the real story is a quiet battle inside his portfolio. American Express, a stock he's owned for 20 years, is now challenging tech giant Apple for the top spot. This isn't just about numbers. It's a lesson in patience versus panic. A lesson for every Kenyan with a M-Pesa investment or a SAW share. So what did Buffett say as the world freaked out? First, he compared stocks to food. He said, "We're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow." Think about that. When Ugali or Sukuma Wiki prices drop, you're happy. You can buy more. Buffett says stocks are the same. Most people are savers. They should want prices to go down. But here's what nobody's talking about. Our emotions betray us. We feel better when prices rise, even though we're buying. It's a psychological trap. Then Becky Quick asked about the coronavirus. Was it time to panic? Buffett's answer was a masterclass. He said, if you're buying a business and that's what stocks are, businesses, then presumably if you buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. He reframed everything. You're not buying a ticker symbol. You're buying a piece of a company like Safaricom or Equity Bank. And then he asked the billion-dollar question, has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? For the businesses he owns, like American Express and Coca-Cola, the answer was no. You don't buy or sell your family shamba based on today's headlines. But here's the part that will blow your mind. Quick pushed back. What if you wait and buy 10% cheaper next week? Buffett laughed. He said if you think you can time the market, you'll get fabulously rich. But nobody knows. The key is knowing whether you're making an intelligent purchase at a given price. This is where the portfolio battle gets real. While everyone was panicking about a virus, Buffett's long-term bets were quietly working. American Express, a business he understood deeply, was gaining on Apple through steady performance. No flashy tech. Just a durable brand. For Kenyans, the impact is huge. In a market driven by headlines and speculation, from Nairobi's NSE to crypto buzz, Buffett's message is a lighthouse. It's about perspective. Zoom out, think in decades, not days. The controversy? Some say his old-school approach misses the AI and crypto revolution. Others say his patience is the only true edge. So, the big picture, a market crash is a test. Do you see a sale or a crisis? Buffett saw a sale. And his favorite holdings, like Amex, proved him right. The unanswered question, in Kenya's fast-moving economy, can we afford to think in 20-year blocks, or is that a luxury? The payoff, remember the hook. The greatest investor was happy during a crash. He saw opportunity where others saw fear. For your investments, ask Buffett's question, has the long-term outlook truly changed? Or is this just noise? Do you think Kenyan investors are too focused on short-term headlines? Drop your take in the comments. Subscribe to Kenya News Update today for more insights that build wealth, not worry.